evening, everybody. I think it's fair to say it's been a pretty rough couple of years for the financial markets and public markets following Brexit. However, one thing I believe remains clear is that the UK has an abundance of small, ambitious companies looking to raise capital and an investor community always in search of higher returns. At NEX Exchange, our goal is pretty simple. We connect both of these parties in a transparent and cost-effective manner ultimately to support high growth and investor returns. So what is NEX Exchange? NEX Exchange is a London-based market with exactly the same regulatory status as the LSE and AIM. We operate a main board, which has the same regulation as as the London Stock Exchange. This market is usually aimed at larger companies looking for exposure to pension funds and larger investment houses. Our core focus, however, is the growth market. The growth market has exactly the same regulation as AIM, and therefore, all the investor benefits, such as capital gains tax, inheritance tax relief, in addition to EIS and SEIS for eligible companies. These are fantastic benefits which can significantly de-risk your investment. At present, we currently have 85 companies on the growth market, with market caps ranging from small technology companies with, say, £500,000 market cap, all the way up to Arsenal Football Club with a market cap of over £1 billion. However, bearing in mind it's £20,000 a share and their current league form, you'd have to be a pretty loyal fan to want to get involved. Whilst NEX has attracted a wide range of companies onto the market, our core focus is really at the smaller end. So companies with market caps of, say, 2 to 50 million, looking to raise anywhere between, say, $500,000 and $10 million. When it comes to fundraising, our growth market is one of the most flexible in the UK, allowing companies to raise capital through both debt and equity. So at present, we have 11 bonds on the market, raising anywhere from $500,000 to $20 million, usually with coupon rates between 6 and 9%. Not only is this a high return for the investor, but it also gives the companies an opportunity to diversify their source of capital and avoid diluting their equity base. Now, the third segment of the market is NEX Trading. This is our live secondary market where all NEX stocks are traded. In addition to this, we also trade around 500 AIM stocks with 400,000 trades being executed last year alone. So why are companies choosing NEX Exchange? The majority of companies coming to a market are looking to raise capital. Now, as we discussed, we offer capital raising through both equity and the debt market, but who is actually investing in these stocks? Because of our regulatory status, it allows our companies to go out to retail investors such as yourselves, professional investors, in addition to family offices and some of the most well-known institutions in the UK, such as Gervais Williams of Mizon. Cost should also be a big factor when choosing an exchange. At present, the public markets are perceived to be a very expensive way of raising capital. With other UK exchanges, it's typically going to cost you between £350,000 and £500,000 just in fees alone to join the market. Now, for a small cap issuer, this is far too expensive, unfeasible, and a barrier to entry. For exactly the same quotation on NEX, companies are finding that typically costs are coming in at around a third of the cost. So as an investor or a company manager, I think you've got to ask yourself, where are these fees actually going, and could they be better spent elsewhere? We certainly think so. With regards to liquidity and live valuation, we operate a quote-driven market where we have market makers on all our stocks. This means as investors, you always have a live price to buy and sell. Investors can trade on the market through any one of 46 broker members, including the likes of Barclays Stockbrokers and Hargreaves Lansdown. And finally, control. For entrepreneurs, they don't want to lose control of the company that they've built up over many years. At present, quite a lot of the time, companies are having to go to either venture capital or private equity, where typically they're going to have an exit horizon of, say, 4 to 6 years, and they will want a seat on your board. You might not want to exit in 4 to 6 years, but you're now under this pressure. By coming to NEX, you only have to give up a minimum of 10% of your company of equity, giving you control over the company moving forward. So who do we have on the exchange? As you can see, we've got some very well-known names, the likes of Arsenal Football Club, Shepherd's Neame, but we've also got some much smaller companies, the likes of Coincilium Group. They joined the market at the end of 2015. They were the first ever blockchain technology investment company to join a public market. Other companies that have been particularly successful on the exchange are the likes of Chapel Down. Chapel Down are a vineyard based down in Kent. They joined the market in around 2014 and went on to do a 4 million crowd fundraise. This worked particularly well for Chapel Down as they could offer their investors soft dividends in the way of discounted wine. The investors would then take this wine round to their friends. Their friends would then want to buy into the company so they could also get discounted wine. Ultimately, this resulted in their share price over a 3-year period moving from 20 million market cap to about 110 million earlier this year. But not all companies are joining NEX purely to raise capital. Some of the companies like Shepherd's Neame, for example, are moving to NEX for liquidity. Shepherd's Neame, they've got a long family history of shareholders, all of which are pulling in different directions. Some wanted to buy, some wanted to sell, others just wanted a valuation for their shares. Now, the management were inundated with requests, where are you taking the company, we want to buy, we want to sell, so they made it easy. They joined NEX Exchange, which gave each individual shareholder the option to buy more, sell, and it also gave them a live valuation. This left the management to do what they were there to do and actually try and grow the business. So to conclude, if you're a small, ambitious company looking to raise capital, NEX Exchange is a cost-efficient and engaging way to come to market. For investors, if you're interested in high-growth stories and the latest trends such as Bitcoin or blockchain, you can check all of the companies on our market out on the website, or you can ask either myself or my colleague Matthew Dangel later on this evening. Thank you.
Anybody got any questions at all about the NEX Exchange? Gentleman just here.
Thank you. Good evening. You said you dealt with Barclays stockbrokers. They don't exist anymore and have been replaced by Smart Investor, which has had a rather checkered reception from the retail or the investors. How do you, as a member of the profession, get on with them?
With Barclays stockbrokers?
No, Barclays stockbrokers don't exist. Smart Investor has replaced it. And as it hasn't gone down all that well with the public, and I'm wondering if you have a better relationship as a member of the financial community.
Yeah, I mean, we have a fairly close relationship with most of the stockbrokers. We're not online with all of the stockbrokers at the moment. So the likes of Hargreaves Lansdown, you might have to pick up the phone to them, give them a call in order to execute your trade. With some of the other stockbrokers, the likes of the Share Centre or Jarvis, you can actually trade online now with them. So it is an area that we're spending a lot of time and effort to try and build to make it easier for you to be able to trade the stocks.
You're not experiencing any trouble?
Not directly. We haven't heard any trouble. No.
And a second question is, how long the life has this 9% bond got?
So they range from 4 to 6 years typically. Some are longer, some are shorter. But the point of investing in a bond is meant to be safer than an equity, but you're almost getting returns as if it was an equity. So it is quite attractive at the moment, especially with family offices. It seems a good route to get some return on investment.
Gentleman over here, just 1 second for the microphone. Thanks.
Thank you. I'm not familiar with. There are some other smaller exchanges. I think there was it called ISBX?
ISDX.
ISDX. Does that still exist?
So we were formerly ISDX.
Okay.
So the history of the exchange, it started off as OFX once upon a time. That moved into being Plus Markets. Then around 5 years ago now, a company called ICAP bought Plus Markets and it changed to ISDX. Now, ICAP have recently gone through, they've sold their voice broking business. ICAP's an interdealer bank broker. They sold their voice broking business to a company called Prebon. And with that, they changed their name. So they then became NEX, taking ISDX to become NEX Exchange.
Okay. Do you happen to know if Hargreaves Lansdown will let you buy Next quoted shares and put them on in a SIP? Because they didn't used to with ISDX.
I don't think they do at the moment. There are a number that do, and I can let you know them after the session.
Okay, thank you.
Could you tell me how profitable your company is? I mean, if you were to go to the wall, what would happen to any of the shares that
Sure.
you may have purchased?
Yeah, okay. So NEX Exchange is owned by NEX Group. They have 1,500 employees. They are present in, I think, 37 countries worldwide. They're a 3.5 billion market cap stock, actually on the London Stock Exchange. So with regards to where plus markets used to be, where, yes, if they were possibly in a position where they could have gone under, we've got the full support of NEX Group and Michael Spencer, who is the CEO. So it's in much safer hands now.
Gentleman just there.
Hi, two questions. First question is about things like bid-offer spreads that you might expect. Obviously, the market's going to be a little bit illiquid as well, so how long might it take for a trade to execute? And then the second question's whether you could tell us a little bit more about the inheritance tax benefits.
Sure. With regards to the first question, yes, the spreads typically on small cap stocks are wider than what you're going to see on something within the FTSE 100. We are bringing in more market makers. So each stock, we tend to try and get more than one market maker, preferably 3 or 4. This in itself is making the market much more competitive. It's bringing in those spreads. It's small cap, so they're always going to be slightly wider than you think, but they are very much comparable with what you're going to see on AIM. With regards to your second question, inheritance tax, so I believe if you hold the stocks for a minimum of 2 years, then you receive full inheritance tax relief on the stock.
Any other questions? Out of interest, anybody held stock on OFX, plus markets, ISDX, or NEX at any point in their life? 2 of us? Yeah. I've got Doremus, and that's because it was an AIM stock, and it moved down from AIM down to NEX. And I think one of the things about the NEX Exchange has always been it's a chicken-egg situation. You've got the companies, you've not had the liquidity. You're now building liquidity with the brokers. Are you getting many more retail brokers coming on board? I know you talked to AJ Bell and a few others about opportunities. Are you beginning to see a bit more traction there about being able to deal online?
Definitely. I think since the rebranding from ISDX to NEX, there's been a much bigger marketing push. Part of that has meant that, especially with companies coming over from AIM onto NEX Exchange, the brokers are under much more pressure to actually be able to offer online trading on NEX. So a lot of the investors, they're asking the question to the brokers, how can we trade? This is putting them under more pressure. They're coming to us and say, okay, yeah, we'll start trading your stock. So it's going to take time. It's not something that's happening overnight. They need to see enough demand to make it viable for them. And obviously there's quite a few brokers out there, so the demand's spread at the moment. But we're going in the right direction with it.
You mentioned in one of the slides about your free float that it's a minimum of 10%.
Yeah.
Is that not too low? If you're trying to improve liquidity in a stock, surely it should be more like AIM, which I think is 20-25% liquidity, or free float?
Yeah, and I think this comes down to the companies and the actual investors. All this information is disclosed when companies are coming on board. But what it allows is companies that don't want to give, they might only need to raise 10%. That the additional 10% that you would give away on AIM, well, not give away, but raise on AIM, is not actually being utilised. So as a company, is it actually more effective to just raise 10%? Okay, our stock isn't trading that much, but if you're a £10 million company, how much is your stock actually going to trade? You know, if you've only got 10% in free float, you've got £1 million out there. Well, there's probably not going to be an awful amount of trades anyway. So yes, the more free float, the more liquidity, but for certain stocks, they might not want that.
You're not going to change those listing rules that from 10%, you're going to leave it as a 10% threshold. You're not going to move that up to, say, 20% to put more into markets, potentially.
I don't think so at the moment.
No.
We haven't discussed it at the moment. At the end of the day, it gives companies more flexibility.
Yeah.
If liquidity is what they want, then they can issue 20%. If they don't want liquidity, then it's up to them for the 10%.
Thanks very much indeed.
Thank you.
Max. Thank you.